Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, May 11th, and we're looking at Window Trader's market profile of SPY, IWM, and Triple Q. And pretty interesting day. It was a very good day. Once again, most of my trading was done early in the day. That's where I made the bulk of my P&L, because then we got into some serious chop, which I can't stand. Bottom line is this. After we attempted to go trend in C and failed, once D took out C's high, what did we do for 10 time frames? We trade inside of B's range. That's it. Plain and simple. IWM and Triple Q is a little interesting. They never saw their opening after these huge gaps. They had tremendous gaps today and filled them. They filled their gaps. IWM had an inside month down. They stopped the one-time framing up on the monthly for the first time in 7 months. Inside month down and came back into it by $4. Now again, one day doesn't make a market, and obviously there was some change in the structure of the charts, especially, right? Russell now is in balance in the monthly. It finally stopped the one-time framing up. But this is pretty impressive. They never saw their openings. 11 wide for Russell, 9 wide for Qs. Now don't forget, there's still double distribution days to deal with from yesterday. And Triple Qs have the gap from yesterday they didn't even fill. So think about that. Triple Q's gap yesterday was small, and they couldn't fill it. Today's gap was $6, I think. Just about $6, and they filled it. Wacky action. You gotta love it. I did no trading in Triple Qs or Russell. All my trading was in Qs. We opened, again, I said in A period. I said it this morning on the video. I said it in the room. There is no reason in the world that you have to take a play in A period. And I didn't. It was a lot of back and forth. I said I'm looking for better risk reward on the short, and I got it in B period. Even though we started one time framing up, B took out A, didn't get much for it, I took a put play. I traded tomorrow's expiration. I did the 317 puts, and it worked out very handsomely as we came back into A's range and came back down. If we had gotten more giddy up, I would have taken a much bigger size. But I didn't take big size. It's only a 30 lot, but it paid me very nice. I was prepared to get rather large because we had the gap and we had lower value. Then in C period, when we took out B's low and started getting acceleration, started scalping shorts. I did it at least 2 times of the 413s. And then when we got all the way down, I had taken the rest of my short off. I said I will take a long one time against those 2 weekly lows. And I bought the 409 calls, and literally I bought them and they shot right up. And believe me, I didn't get the whole move. Boy, I should have waited, but they paid me very nicely, very quickly. A very visual area. Then that was, those trades in B and C made my day well beyond what, I was very happy. G period, though, I did take a short. We were one-time framing up. So what happened? D stops the one-time framing down, starts taking out the shorts. And then you get the momentum buying, D, E, and F. I told the room. I said, if we don't make a new high, that's what these short-term buyers want. They need a new high to get paid. If we don't get that, they'll give it up. Well, as soon as G took out F's low, jumped on board the 415 puts and got paid. And then in J, I did the same thing, basically against A's high, and got paid. And that was it. Now, I could have been long, short, long. There was so much chop. We had over a $5 range, and all our volume was in an 85-cent range. But that's not my kind of trading. I stayed out of it. And that's fine. I had an excellent day, and tomorrow's another day. So, impressive by the Bulls with the comeback, but let's not start celebrating just yet if you're a Bull. And we'll go over that in a minute. So upside destinations. We only have one from today on the upside. That's today's high at 415.27 and then filling the gap at 417.81. So it's still a rather large gap. It's 254 points. Or penny, whatever you want to call it. right? Then you have the price probe, 418.74, and then you have the single prints from yesterday and all the others I gave in last night's video. For the downside actually has some things to lean on again. We have a 12 out of 13 wide POC, 413.59, eyes low. Then we have an afternoon pullback low. So we have a gap of 250 ticks, and I have an afternoon pullback low, G's low, 412.04. Then we have today's low of 410.06. So the way everybody yells, gap rules apply, this and that, you know what was the biggest rule that should have been applied today that worked beautifully? Balance rules. We slightly stretched the balance. That's why I took the long and got paid for it. Now again, one day doesn't make a market. So what do I mean by that? Let's go to the charts. What I mean by it is, here's your weekly now. We're in a 5-week balance, including this week. 410.20 was the low of it. Well, now it's this week's low of 410.06. Now, yes, we rallied $4 off of it. We closed $4 higher than the balance low. But again, this market, that's, remember I said I was looking for a $7 to $10 move? Well, look at how this market moved today. So we went from no volatility to good volatility. So is that weekly balance low secure? Absolutely not. Absolutely not. One day doesn't make a market. So what's going to make me change my mind? Well, let's go to the daily. That's a better picture. The monthly is up, still very healthy. The weekly is balanced, clearly, 5-week balance. The daily is down. So what is going to change, or what should we be looking for tomorrow? Two things. One, if we go and take out today's low right away, well, obviously, that weekly balance is not holding, and then we're going to go test, I believe, the 398.403 level, which is where the 50-day moving average is, which is where that large weekly gap is, and where the monthly gap is. That's one scenario. Second scenario, we open and take out today's high, but don't fill the gap. Buyers run out of steam. We take back some of the gap, but close back inside today's range. Well, yes, the daily would be back in balance, but then Thursday becomes really important, because then if you can't take out and follow through on that upward move and take out, say, Wednesday's low, again, nothing's changed for me. And we'll go test the bottom of that weekly balance. That's the scenario number 2. Scenario number 3, which has worked for the last year, excuse me, we open tomorrow, fill the gap, and get acceptance back into this range here. And get above the 20. Then all you did is test the balance low, and guess what? If you fill the gap and get acceptance back into the 10th range, what's the opposite destination? The all-time high. So those are 3 scenarios we should be looking for over these next, say, 3 days. We take out the balance low, today's low, and rip. We take out today's high, don't get much for it, come back in, and then Thursday go back down, or we do the last scenario. What could be a catalyst for these 3 scenarios? Well, a lot. We have CPI and PPI that's going to show this inflation picture. We all know, look, the entire population of the world knows we have inflation, except where it really matters. And that's the Fed and the Treasury, who keep denying it. As long as they keep denying it, you're going to keep rates low. Plain and simple. At some point, if they get behind the 8 ball and not only have to raise rates, but raise them quickly and dramatically, then this market will get destroyed. But until that happens, they're going to keep backstopping it. You also have so between the bond auctions you have this week and the CPI and PPI, we should get a lot more clarity out of which of those 3 scenarios will play out. We had a really good day in the trading room today. We kept everybody safe again early. We kept, I think, the entire room profitable throughout the day trading MGI. Hope you had a great day. Enjoy your evening, and we'll speak prior to the opening tomorrow.